Good morning, everybody. Just want to get the prep screen up and available for you. You can also refer to the Discord room for the other additional picks as we get started. I'll leave this up so you guys can get your zones plotted out, and we'll get started with the regular session here in about 15 minutes. Thanks, Brian. Hey, Mario. Good to see you, buddy. Now the pressures are on. I'm gonna have to get Mario some really good trades. It looks like the indexes are moving up just a little bit. Got to do a little critiquing. I do have some zones already plotted out there. Boy, the indexes are, sorry, not the indexes, but the FX market is just on a rocking move with the yields. You see that? Yeah, just on the hourly chart, the 10-year yield is one of the big odds enhancers that we've had, and it's taken a little nosedive right now. Not done as far as what everybody thinks is going to happen going up, but the 10-year yield, not the treasuries or the bonds, okay, but the yield has been a big factor in how this index going up or going down. So it's an inverse relation to it. Okay. We'll talk more about that as we get started and doing a pre-market prep and get things ready. But things are moving pretty good. Long-term charts, keep an eye on the 10-year, the 5-year, and the 30-year, as they are all in weekly demand zones. And these can be long-term, long-running trades, okay? Looks like we've already got a breakout point on the Aussie dollar and a few of the other products. So lots of things coming up. We got silver for the breakout. Swiss franc's already breaking out. I'm going to have to wait for a pullback on a couple of these. Okay. And let's see, yeah, we'll just and we just came right back up to that resistance level where we had yesterday. Thanks. Yeah, we got to find some music that we can use in the pre-market here. 42.60. Yeah, I'm still getting set up just a little bit here for some of the pre-market. I'll put the prep screen back up there for everybody so you can get yourself set up. Just give me just a couple seconds here. And don't start chasing the breakouts at this point. We still have some economic news coming out, which I'll cover. And remember, price is gapping up inside the prior day's trading range and often fills the gap. So even though the markets may be up in the pre-market, we should have a significant day for trading, but we want to make sure that we understand when the price is gapping up inside the prior day's trading range, the gaps often fill very early in the same trading day. Okay, it is an outside day today, but again, where price opens will determine if the gap's going to fill during the regular session. Not 100%, because we do have 2 unfilled inside day gaps to the upside. So we'll pay close attention to that. All right, let me put the prep screen back up. I'm going to mute for just a couple more minutes, and then we'll get started. Yeah, it is an outside day on the equity indexes. Yeah, see, everybody has broke the outside. It's an outside day, but it's where price gaps up or down at the session open. Okay. So if it's an inside day, high probability the gap fills the same trading day. Okay, very high. If it's an outside day, but gapping up or down inside the prior day's trading range, we still look for the gap fill, but it's a less percentage of the time. Price gapping outside the range of the prior session often is a gap and run prices do not often fill the gap. All right, let me get the prep screen up there, and we'll go live in about 6 minutes. Well, we're already live, but we'll hit the ground running here in about 6 minutes. Yeah, Liz, I think them goats are going to be happy for a while now. Crude oil hit. Dang it. Why couldn't they wait till we get started? All right, 1 minute. We'll do a formal intro. All right, good morning, everybody. We're going to go ahead and get started here. And there's a bell. Good morning, everybody. This is a live trading room with me, Jeff. Today's October 4th, 2023. Okay. Let's go through the disclaimer. Information contained in this presentation should not be construed as a recommendation or an offer to buy any security or financial instrument. Additionally, information in this presentation does not imply the suitability of any investment strategy. We are not licensed brokers or investment advisors. All attendees of the presentation and purchasers of our content are encouraged to speak with a licensed representative of their choice regarding the appropriateness of investing, trading of any investment, and any trading strategy. We are using real-time market data and will be executed trades in a simulated account during our presentations. No offer on our part respect to the sale or purchase of any security is intended or implied, and nothing contained in here should be construed as a recommendation to take a position in the market. The intent of this information is for instructional and educational purposes only. Any fair use of third-party trademarks or logos does not imply an affiliation or a sponsorship. All trading involves high risk. Past performance is not indicative of future results. We make no promises, guarantees, warranties, suggesting that any information shared will result in a profit, not in a loss. You agree to not hold us legally or financially responsible for any reason. All right. Now that that's out, let's go. There we go. Let's get started. This is a daily overview. I have zones plotted for the sell territories and the buy territories. Now, I do need you to do your own research on the zones that I have posted here. Put the lines on your chart and then look left. Some important things to look for when you are setting up your levels and your lines on the chart, which I have put for some bigger picture time frames, is to note whether that zone is during the overnight session or if it's during the regular trading hours. Okay. Now, zones that are created during the regular trading hours on increasing volume have a little extra higher quality to them. Okay. Meaning there's more unfilled orders left at that area, okay? So again, just referring back to the disclosure document, make sure you do your own work and verify the lines. Every once in a while, I can get some numbers mixed up. My team is pretty much on top of me for the most part, but sometimes I get a little ahead and make a little typo from time to time, okay? So make sure you always verify information. Any trades taken by you are your trades. They're not my trades, okay? Let's see, bonds and treasuries were at multi-year lows, but the yield was at a multi-year high. And in the pre-market, as we started looking around earlier, okay, we can bring up a trading view here just to get a good picture of that. Sorry, come back down. All right. So what we have noticed and why we're using the treasury yield versus the bonds here is that the bonds and the notes are somewhat correlated with the equity indexes. Okay, but the yield is inverse correlated. So as we're looking down and left and looking for demand zones and such, okay, we want to pay attention to what is going on here. Now, we've had a significant move, okay? We're not into any demand zone yet on the hourly chart, okay? There is a lot more upside, and the treasury yields on the 10-year at all-time highs. So it's like it's like when markets get to all-time highs, they just keep on going. So pullbacks in the context of an uptrend, okay? Now we want to pay close attention to this because the yields dropped and we have seen the equity indexes rally, okay? Paying close attention to the dollar. The dollar has pulled back and we do have some zones a little bit lower that we want to pay attention to, areas where price may bounce, okay? But it is still in an uptrend, and there is still a lot more upside when we come out to the larger time frame, okay? The opposing supply or sell territory can still be seen up a little bit higher, okay? Now we use the support and resistance areas to find where we might have the sell territories, okay? I'm just kind of mapping that out right there. So our sell territory is up a little bit higher, okay? All we're doing is getting a small pullback, okay? I also want to remind you, based on, come back out to here, 5-year weekly, 5-year, 10-year, 30-year bonds are in weekly demand, okay? Now, it's going to take a little time to turn out of that weekly demand zone and the multi-year lows, okay? We'll come back and look at some charts in a moment. Oil had a 60-minute zone. We are now, there we got the open range breakout, prices to the upside. So I'm going to use that range.
Order filled.
I'm in that, and I'm going to use the that open range breakout. We'll have the area right there, okay? And I will look at placing a stop loss as soon as I get my lines to work. There we go. Okay, so I'm a little late on the open range breakout. Okay. Keep an eye on our schedule and our calendar on our website. Some of the start times are going to change when it comes to the live trading room so that we have enough time to set up for these trades, okay? Right now I'm just trying to keep everything basically the same as we make this transition, okay? So a lot of announcements to come out. You'll see them in the Discord room, and you will also see them through emails. So make sure everybody goes out and registers on the website so you can get notified when things are happening, okay? Stop loss, 87.40. I took 2 micro contracts on this trade, and I want to express here, okay, managing risk is important, okay? Any trade you take has risk, okay? So when you take that trade, I'm also going to exploit that I have $80 worth of risk on the trade, trading 2 micros, okay? Now that's important that you always get that dollar amount in your head that, hey, when I get into a trade, I can lose this much, okay? So always be prepared for that. If the risk is too much and outside of your personal trading plan, then simply do not take the trade in your live account, okay? That's your responsibility, okay? All right. OPEC meetings all day. Thanks for saying that, Chris, okay? I didn't catch that earlier. I do want to point out, Chris G is back from vacation. All right, so we are so happy to have her back. Missed you. But what I want to talk about here is in the Discord room, students put out information, okay? And so do I, as far as in the pre-market. These things will change a little bit later, okay? But right now I'm posting in the Discord room for additional trade opportunities, and you'll see that, you know, we're posting the prep screen a little bit early so you can start getting prepared, okay? There will be other resources on the website here in just a few minutes or a few days for you to go and get prep screens and opening screens earlier. Now, what I want to exploit, and I did copy and paste this down here, This is a report for the crude oil report. Now, Chris has been documenting this for well over, well, it's just 65 weeks now, okay? Upon return from vacation, I spent afternoon catching up on the study. Average range for the last 65 week study is 68 cents. Now, that is the reaction, okay, that price has made off of the what Chris uses as her announcement candle, okay? So no charge posted, no trades done by me last week. Today's API report, American Petroleum Institute, reported at 4:30 p.m. Eastern yesterday, sizable decrease in supply. So when supply goes down, prices go up, okay? Prices go up. But when we're looking for prices to go up, it may drop to find the buyers to move it up, okay? So we're looking for that opportunity for a direction to the upside, but we have to use the supply and demand areas to enter the trade and, for most of all, manage the risk on a trade so we know what it's at, okay? Perhaps during the Globex price drop into a leg base, which right now it did drop into that demand zone that we had there at 87.03, 86.76, okay? So you have real trading, you have to expect that you could get stopped out of the trade, okay? So we did test that zone. If I'm stopped out, then I'll look to the lower zones here to participate. Or I'll wait till things are starting to heat up and I'll look for another breakout
Order
above
filled.
that area, okay? Now don't be upset if you get stopped out of a trade, okay? This is all part of trading, okay? So I still, with that report, I'm still bullish. I still need to find a way to get into it, okay? All right, let's see, coming back out here. Yeah, we had oil in a 60-minute down. We're in midweek during the Jewish holidays. Brian, can we put the link for the Discord in there, or I can do it in just a moment in the chat. Thank you. Yeah, I do want to introduce my my team in Brian and Stephanie and Chris, and all of these folks are here now to help run the show and back things up. And they're an amazing team. You guys are going to see a lot of great things coming out, as you might have already seen. I'll grab that here. I'll post it in the chat. There we go. There you go. That link will get you in here. What's important about the community room, TMI community room, is it's just traders helping traders, okay? Throughout the night, we have traders that are all around the world, Dubai, London, Singapore, I mean, just everywhere, and of course the US, and Chris stays up all night trading anyways. So, we are posting different things in here. It's just our general chat. Our Picture Perfect Past Trades is where we want to post trades that are either setting up. I like to use this room here for understanding what the students are seeing on the picture. If you need student help, you can come in here, here to help and answer questions. We do have some TradeStation workspaces that I posted. These are the ones I use. If they help you build your own workspace, fantastic. And therefore the 10.0. We'll be posting a lot more in here in the upcoming events. And I do want to point this out. As we are building the website out, we do need some testimonies from everybody. And if you could drop some testimony in that would be absolutely fantastic and very much welcomed. So, all right, I'm going to move this back over and we're going to get back to work here. All right. All right, so we're going to keep an eye on the US dollar. As it keeps going lower, the markets will be a little more bearish. checking the news, and as the storm clouds gather over the bond market, watch these levels on the S&P 500. Okay, so they're coming out now and telling you the bonds are really, really low. Okay, well, we already know that, and with the bonds being that low, okay, we see they're all in weekly demand zones. They're already bouncing out of that area. Okay, now we have a larger time frame zone. Okay, you can still turn the time frame down to a smaller one, and then find your price pattern to get in and manage your risk. Okay, but I do want to point out 10-year is in the weekly zone, 5-year in the weekly zone, and the 30-year in the weekly zone. Okay, with the drop on the yield and the dollar, we're also seeing some move on the FX markets, Australian dollar. The Canadian dollar, we're looking for breakout to the upside. British pound, well, we need a pullback to demand at this point. Now, I will point out that the British pound on this trade setup is in a higher time frame demand zone. Now, I broke it down to a 30-minute chart so that we could leg into it. Okay, so you can see the buy territory over here. Now, anytime you're using supply and demand, the zone must be in the right location. Okay, this is why we use support and resistance. Support and resistance tells us where the sellers kept pushing price down, more sell tickets than buy tickets. The area below is an accumulation of orders. Once price takes out those sellers that were left over, price will then come back down and find the buyers at some later date, which we have done here. Okay, so location of a supply zone, location of a demand zone is utmost important. If it is not in a buy territory or sell territory, that like something like here, okay, it becomes more of a profit target. Now, we took the 480-minute chart, got an idea why price was changing direction here. Dropping down to a smaller time frame, we're looking for the patterns and structures to help us splice in. Scott, great question. Are those bond zones proximal, or do we need to do second test? They've all gone past about 1/3 of the size of the zone. Okay, so we can take them as price leaves the zone, or like I'm demonstrating here on the British pound, is take those bigger time frame charts, turn them down. We have this zone on the British pound at the moment. Okay, now notice that once it dropped into the large time frame zone, okay, if it's going to make a change in trend, it must build a fresh accumulation of orders. So I keep dropping the time frame down just little by little, okay, to get that exact right picture. Okay, as you can see, and as I see myself here, is that we've already missed the breakout trade or the confirmation on a large time frame. Okay, but price may come back down and into the buy territory for a supply and demand trade on this time frame here. Okay, so since I missed the breakout portion of the trade, and I just on this small time frame now I can see where I have that support. Okay, and I have a small time frame sell territory. I want to make it really abundantly clear. I'm not going to try to teach everything to you. I mean, this is the live trading, but I do want to explain for some of the new folks out here, you know, that location for your supply zone or demand zone is very important, especially if we're making lower highs, okay, or higher highs. Okay, they tell us the location of where we can find that leg-based group of candles where we have a very high probability of price change in direction. So in a perfect world at this point, price comes up, finds some more sellers here, pushes price back down to where we can enter, and then on a larger time frame, we would have that picture that we all like, that I used to document quite a bit, okay, of the bird, okay, just looking for where price may make that reversal pattern, okay. Now, all of this is just information. We don't have action to take until price returns to that zone, okay. All right, so just pointing those out. Canadian dollar continues to move lower. Let's take a little look at that. I'm going to come out to a larger time frame. And I don't want to lose time. We do still have to do a pre-market prep. So when I have the green boxes extended across, okay, often these are areas of support or red boxes resistance, okay? So down in this lower level, okay, we do have an area of interest here where price has made that fresh buy territory, okay? 78% of the time, when price hits support or resistance, we can get a good bounce, especially on the higher time frames, okay? So we want to pay attention right here is that price comes down and hits 0.72645 or 647 there, okay? That's a larger time frame zone. If we're going to splice into this move back up, and I do want to point out that this area here of light volume drop, okay, can be retraced very quickly. We can see examples here, light volume drop, retracement back up, light volume drop, retracement back up, light volume drop. I want a piece of that move back up, okay? But it's to the markets right now to determine if price is going to go down into that support area and then turn, or the breakout trade is going to come into play. And Brian, if you need help if you need me to slow down a little bit, just let me know. And also in the chat, if I'm going too fast, let me know. If you have questions, let me know. Okay, happy to explain things. So back to the prep. So we've seen a move down on the dollar and in the overnight session, and we've seen a pullback on the yields in the overnight session. We check in the or check in the news to get an idea of what people are thinking about bond markets, what's going on as far as political. Biden administration to cancel $9 billion in student debt. Wow, who's going to pay that back? All right. Mortgage rates towards 8%, pushing to demand. Oil prices edge lower. Okay, but yeah, we want them to edge lower. Okay, for the buyers. Okay, now when we take the news, we want to go and look at the charts. Now, if we combine this piece of information with what Chris put into the Discord room, talking about that the API and the EIA report both indicated a drawdown in supply, okay? So less supply, prices go up, okay? But again, oil prices head lower looking for buyers, okay? Less supply still means prices go up, okay? So we have to be prepared for that and, just have a way that we're going to be watching for that opportunity on crude oil. Okay, so I'm going to set, I did get stopped out, but I'm going to come back up here at 87.81 and place that breakout trade, okay? I'm sticking with the micros right now. This week should be still pretty volatile because of the Jewish holidays going on and lighter volume. This happens every year, and believe me, I've watched it many, many years around this time before understanding those holidays have such a huge impact, okay? So price on crude oil dropping into demand is actually going to be a pretty good thing for an opportunity for us to go long with supply levels going lower. Okay. All right, back to some of the charting aspects. S&P equity index. Daily chart, we are below the 200 simple moving average. Okay. That's going to be a little more bearish condition for bigger market participants, banks and institutions. We want to also step out and look at some of the daily charts, okay, and get a good idea of where things are at. Now, I always want to keep an eye on the daily ATR, average true range, is at 58 points. I'll use that in just a moment. We do have a leg-based group of candles right here in the buy territory, okay? Price tapped that proximal line at 42.43 yesterday, or actually last night in the overnight session. Okay, now 87% of the time we can expect a one-to-one bounce with the leg base. What you have to examine on the leg base group of candles, okay, and I'm gonna open this up so you can see. We had a leg in, the base, a leg out, and another base. The leg candles leaving the zone, if they are bigger than the leg candle in the zone, okay, then price often goes a little deeper and the zone can be used multiple times. See, what we're using the leg base group of candles for is understanding when support and resistance is going to be formed. And what we've seen in the characteristics, that support and resistance levels are formed with the leg base group of candles on the left-hand side, whereas a zone can be used multiple times. Now, if the leg candles leaving that proximal line are smaller than the leg candle in the zone, okay, it is often only a proximal line entry and the zone only is used one time. So knowing the difference between the leg base group of candles and their little subtleties, okay, is knowing when to stay in a trade longer. And having statistics at 87% of the time, we get a one-to-one move away. We can then look at that target at 43.32 on this proximal line entry. Well, there's still a lot of risk to get in. We just don't press the button to jump in, okay? So what we have to do is look and say, okay, well, based on that information, we should be looking at a bounce back up roughly to that 43.30 area, okay? Well, look at that. 43.30 fills the unfilled gap, okay? There is another leg base group of candles, and that would be a one-to-one move away, okay? Now let's bring some other statistics in here. Now, I do want to help everybody understand there's a reason why we're looking for this pullback right near the open, okay? And the pullback is going to be the opportunity to get in and go long in the direction we're seeing on a large time frame, okay? So prior sessions high and low are big pieces of information to see if price is an outside day or still stuck inside the prior day's range. Market conditions are different when we're stuck in between or an inside day versus an outside day. We're using this information to kind of gauge the weather. No different than looking out your window and see if it's sunny or if it's raining today, okay? And you start setting up your plan, clothes to wear, equipment to carry, and so on, okay? Prices gapping up inside the prior session's range. We have a high percentage of the time price will fill the gap the same day, okay? Price gapping outside the range often doesn't fill the gap in the same day, but it has the last 4 times, okay? These are just statistics. Statistics and measurements help us understand our risk on a trade, okay, and to the trading environment. The next piece of information is we use the Globex range, okay? Globex range right now, oh boy, I'm running out of time too fast, okay? Globex range compared to the daily ATR, okay? If the Globex range is 70 to 100% of the daily ATR, then we're looking for a bull trap or a bear trap scenario. That's first supply zone or first demand zone below the Globex high and low, okay? If it's between 40 and 70%, it's really a choppy and often a volatile open. If it's less than 40% ATR, Globex range compared to the daily ATR, often we have a longer running trending day, okay? And we need to wait for those opening, okay? Prices opened up inside the range, and let's just look at all the indexes together. All of them are now looking for potentially price to come back and fill the gap or come back down to this area, okay? On the Russell, let's jump out to a bigger picture. Okay, price is moving up at the moment, but we're still expecting the gap fill. Russell ATRs on the daily chart. $30 points. We're at 24, so we're about that right in the middle of that range, okay? Now, looking down below, we have a leg base group of candles on the Russell. We're expecting the gap fill on each one of the equity indexes, okay? So we now have a demand zone, okay? That demand zone, we're looking for, and we have potential breakout trade. Since we're an outside day, we can take breakout trades. And we take that resistance area right now. Breakout, looking over to the left, no speed bumps, just a nice pocket of points, okay? So right now on this, on the Russell, as the day is opening, okay, we're looking for price to come back and fill the gap, possibly drop into that demand zone, okay? This demand zone and this area from a large time frame perspective is just support. On the Russell, if price holds this level and you get along, this whole area is used up, okay? So I am also looking for some longer term trades, okay? If the price starts building a base and gets back into this dead space, it should easily go back to the other side of this, okay, up to around 2,000. Now, even just holding 1 or 2 micros can, in the overnight session, that can be a nice little return, okay? But right now, we're at that support area. Hi, Sean. Inside day, outside day, and we're referring to the open, okay? If price moves outside the range of the previous day's range, but it opens back inside, okay? Now, once it's broken the prior session's range, okay, it's like breaking a glass, okay? Once it's broken, okay? And we use that information. Sometimes it's only broken by a tick or two, but we have to have some absolute rules. Once price trades 1 tick below the prior session's range, it's an outside day, okay? We want to make it that cut and dry so that we can gauge our risk based on market performance, okay? And in a way that we can document and keep this very clear in our mind what's going on, okay? All right, let's see, S&P, still looking for the gap fill. And also NASDAQ, stretch that up a little bit. All right. All right, crude oil's back in the zone. Our open range breakout was to the downside. I have 1 trade at 87.81. Okay, I'm gonna cancel that, actually, yeah, I'm gonna cancel that order and look to go long as this zone over here. If you look to the left, we got a proximal line entry, okay? Let's just do this real quick for a lesson here. I want to look at the candle formation there, and I want to see if the leg candles leaving were bigger than the leg candles in the zone, okay? Because that will help me determine if I can look for that opportunity where price goes deeper in the zone, okay? If it goes deeper, I can still take it as price leaving. We have two levels in this buy territory. We are just below this one, okay? And this is a pretty small time frame. We have another one down below, but I want to make adjustments here on this one because this was the origin of this move here, okay? Now, when we're using the structure in the buy territory, we want to make sure that if we're making higher lows, that our leg-based zones are in the upper 2/3, okay? All right, so it went through that upper one. And we just got a tap off of that one. I'm going to place it order to go long. See if we can get it right there at the proximal line entry. Come on, make us look good. You guys keep jumping in front of me. Dang it. All right, let me size this in. I'm gonna come in with two contracts, micros. A couple some more seconds.
Order filled.
And then I'll add on if it comes back and touches that zone, okay? So the proximal line entry, taking two micros on that. Now, we saw the report that Chris posted in the Discord room, okay, talking about the the decrease in supply, okay. Prices were dropping, and the media was telling you the prices are dropping, but they're dropping back into a demand zone, okay. Now I need to manage my risk, and right now with the current two contracts, I need to set my stop loss at 86.46. Okay. Currently, $68 worth of risk. Okay. Just make sure you acknowledge your risk. If I add on another contract, okay, like that, then I need to put my stop loss. And now my risk, since I added on a position, is $112, okay? All right, equity indexes, NASDAQ breaking out. We still have a large percentage of time where we're gonna come back and fill that gap, so a little bit of a short squeeze this morning, okay? Stocks are moving up. Google, Meta, Amazon, yeah, they're squeezing, okay? Now, we've been using the BKX as an odds enhancer, as do the exchanges use the BKX. The BKX is 24 national and regional banks in this index. The premise behind here is don't fight the banks. So we're using a small time frame to see when the banks are on the bullish side or the bearish side of that moving average, okay? If they're on the bullish side, then we're looking for longs and we're looking for stock prices to continue going up with an inflow of capital that way. One-day volatility index is also something that we pay close attention to. We pay close attention to the BKX and the one-day volatility index because the exchanges, NASDAQ exchange and other exchanges, are using this information, okay, to help them manage risk. Okay, and that's an important part of this. Is what are the exchange using out there to help them manage risk? You go out to the NASDAQ.com website and understand that they purchased this index from another exchange and now have it on theirs, and they use this quite a bit, and they got a good definition for why they use it. Okay. All right. So we had soybeans have come back, testing the top proximal line of that. Soybean meal coming back down. So let's get that one on board. I got wheat. We're already in soybean meal. Since I'm looking for it to come down a little bit lower, I'm going to close that one out.
Order filled.
Okay, so I'm setting up a trade on wheat. Okay, and I'm going to take the profit on this one quickly, since I'm looking for it to come back down to the zone. We had a little bit more on this. Let's just get rid of that
Order
one.
filled.
All right, so now placing a trade on wheat, coming back down to demand at 549. Okay. And wheat does need a little extra wiggle room based on the personality. You can place your stop at the distal or wait for price to come down there. I'm just going to move it a little bit beyond, down to about 545. All right, so wheat is set up, and we want soybean meal. Oh, beautiful. Look at these guys come right back down looking for the buyers. Soybean meal, we're trading the December contract, SMZ23. All right, looking for an entry, 369.20. And 368-ish will be my stop loss. Okay. What else do we have going on here? We got heating oil coming down. Oh, crude oil back into the zone. Canadian dollar still dropping. That's odd. Let's take a look at that. Yields are bouncing back up, so we're getting that little pause, okay? So as the yields bounce up, we see that each time they had these strong moves down, okay, we got about a 50% retracement, sometimes a little bit more on that. So if the yields bounce up 50%, it's basically as it broke the trend line, so to speak, that bounce back up is now having an impact on the equity indexes pulling back. That's why we monitor things outside the price chart as well to get a good feel for that. Economic reports are coming out still. We have already the ADP employment PMI comes out in 2 minutes, okay? And markets are kind of bracing for that. We have 5 Fed chairmen, or 5 different times today Fed chairmen are speaking. Okay. Factory orders at 10, ISM at 10, a couple Fed chairmen speaking, and then at 10:30 we have the petroleum status report. Okay. So there's a lot of economic reports to end. Fed chairman speaking today, tomorrow. Okay, with a kind of a light Friday. Okay. See, we're gathering a lot of information outside the price chart as well as what's inside, okay? Now that economic report that's coming out, we need to see if there's an opportunity to go long. If we get a reaction on the S&P, fill the gap, maybe overshoot, a little panic, that would be a wonderful thing, okay? So I'm gonna look for we have a resistance. Prices broke out of that resistance. we have our buy territory. Okay, so my zone needs to be located in the buy territory. So as I start looking at pivot points or areas in between, okay, most of my 3 touches were on the left, low pivot point was on the right, so my zone is going to be located closer to the lower side of that. Dropping down in time frame to find that leg base group of candles. 14. There it is. Had to go to a 13-minute chart to get that leg base group candle. All right, so let's go back out to the 20. All right, so I have my place. I'm willing to go long on the S&P, understanding the trading environment. And now we're looking for the gap fill. People might think things are a little more bearish. We're looking for a bounce back up on the 10-year. So we're looking at a long on the S&P. I'm going to set this up ahead of time. Okay. I don't have a price to take a breakout trade. Okay. I just don't have a setup yet on this time frame. So based on the time frames that you use, you have to gather the right information. Okay. I'm going to still stick to the micros the rest of this week as we get started and things moving around. If I'm trading mini contracts, you might get a sour look on my face when things don't go right. Anyways. All right, so setting this trade up, 42.44. Okay. And stop loss, 42.35.
Order filled.
There we go. All right, so that trade set up. Market indexes are pulling back a little bit. Same thing, we had the breakout. Still looking for the gap fill. The price gapped up inside the prior day's trading range. We have our buy territory identified below. And then we need to find the leg base. I'm going to go down to a 13-minute chart right away, and yeah, there it is. Usually if one is on a certain time frame, the other ones are pretty close when the big banks and institutions are getting in. They all leave a footprint. Okay. So back to the 20. We have a supply zone, and I use this supply zone as a prep screen zone. We do have other prep screen zones up above. This supply zone at 1509, 1473, I do want to caution you that that zone is inside a dead space. If you're going to participate in taking a short trade there, it is short-lived. Estimate 1-to-1 or maybe 2-to-1 bounce off of that, okay? This zone was also created early in the morning, okay? Not during the regular trading hours.
Order filled.
Oh, we got, wow, nice. Okay, soybean meal has come back down, and as always, identify your risk on every trade, okay? What is wheat doing? Wheat come back down? Almost there, okay? Canadian dollar also approaching, heating oil approaching. I was stopped out on crude oil, okay? Russell has come back down to that leg base. That's a little wide zone. Okay, so I'm going to give this a little more wiggle room. or a little more smaller time frame, it did fill the gap. And I'm looking for that 1732 on that. So I'll take a couple micros, 1732 half. And adjust the stop loss down to 24. Oh, that's a big zone. But see, it's a proximal line entry zone. How do I know the difference? When we came down to that 13-minute chart where we had the leg base group of candles, we can see that the leg candle, two leg candles leaving the zone are smaller. Leg candle in the zone is bigger. That often means just a proximal line entry and price does not go too deep into the zone. Okay? Internals. Oh, markets are dropping and the trend is above 1.5. Okay? Trend is high.
Order
We're
fill.
looking for opportunities to buy. Trend is low. We're looking for opportunities to go. As far as advancing issues over declining issues, they're about 50-50. So the trading environment is a little more elevated risk at this time. No buy programs, no sell programs have triggered in the beginning of this, or at the beginning of the session open. And we're still about upticks over downticks, about 50-50. All of these gauges together can help us understand the fear and volatility of the market, understand what New York Stock Exchange, equal number of advancing issues over declining issues. They're still trying to find a direction. Equal number of upticks over downticks. Okay, they're still trying to find a direction. The trend is high as the markets are pulling back, which is a good thing. Okay, it means start looking for your demand zones. Okay. Let's see. What did we get? We got the Russell. Okay, filled on the Russell, and we have our opposing zone is back up at 1806. Okay. Now, if price does go a little deeper into the zone off of here and then come back up to the proximal line, I will get out at break even. Okay. Let's see. Let's try 13-minute. No, 12. Let's see. I'm looking for that leg base group of candles. 9. There it is. Had to go to a 9-minute chart for the Dow. And then we'll go back out to the 20. All right, so the Russell has filled the gap. Dow has filled the gap. We're still waiting for the NASDAQ and the S&P to fill the gap. Okay? And we're waiting for price to come back down. NASDAQ, Dow, let's go back on a 20-minute. Now, you guys can ask questions along the way, okay? This is not just, my way or no way. There's often times when I've got a lot of things going on that I can make mistakes, okay? And, we have a great team of people here watching what I'm doing, but you need to ask questions. If I say something or something doesn't settle right, please take advantage of the chat, okay? And also you can use the Discord room as well. I'll post that link in there again. Now, I'm not monitoring the Discord room at this point, okay, for conversations. I'm just making it known right there, okay? We do offer and talk about this community as traders helping traders, and that's really important that we're all helping each other out. And a couple of days ago, the community room went down, and oh man, so many of us were just going crazy, not having our, our peoples to talk to. Okay. All right, let's come back out. All right, so wheat's still coming down. We did get some unfilled orders. Now, I do want to point out, let's get, what was that, soybean meal? The zones that are drawn, okay, that I've done my research on, and what we train you in the Mastering the Charts course, okay, is these are areas that have very strong and very common characteristics on the price chart of where we see price change in direction, okay? Now, if price is going to change direction, there has to be a large stack of unfilled orders. Well, we know what that picture looks like, but that doesn't verify that there is a large stack of orders, okay? So we always have to manage risk on every trade, okay? If the risk is too large or outside of your trading plan, then you simply size a position. You might take 10 shares on a stock. You might take, one micro, or you size a position, or you may take a bigger position, okay? But the fact that price stopped at this point means there's some unfilled orders here. What remains to be determined, that's why we always have to manage risk. What remains to be determined is there enough unfilled orders to change the trend, okay? So we're using pictures on the price chart to help us make these decisions, okay? And help us manage that risk. Excuse me. Hey, Chris. Thank you for that. All right. Heating oil, still coming down. Crude oil, I want to come back to that one. Overshot the zone a little bit. I'm still bullish on that. We have a breakout area, 87.81. And I do want to take another shot at this, so I'll have to use the low. This was a really small time frame zone, but the larger one did encompass that. So I'm going to take my third attempt on this and recover my drawdown, okay, on crude oil. And I'm going to use the low of the session as my stop loss. Okay. Almanac. Thank you, Chris. Almanac says 74% chance of a positive day. Okay, so we just got to find a way to get into these trades to be positive days. And for that, we're going to need a pullback. And so far, the Russell's the only one that's playing nice with us. Okay. Observing all the indexes together. Okay, we can see that the Russell and the Dow had a small pullback. S&P is still kind of neutral, and the NASDAQ is still looking kind of bullish. Okay. We also note that the price gapped up inside the range on the Dow and the Russell, and the S&P and the NASDAQ. Gaps have filled on the Dow and the Russell, but not yet on the S&P and the NASDAQ. Okay. 2 minutes to economic reports. Okay, we have factory orders, ISM. Wow, those could really cause the market to be a little more volatile. Okay, so let's bring that back out. Ooh, I took an earlier trade on gold as a breakout. Now with the Treasury yields moving around, we need them to keep going down to help me stay ahead of that trade. Okay. Now, don't be embarrassed or shy that there's a negative trade. We all get stopped out of trades. Okay. My biggest reason for getting into gold is more so from the daily chart. Okay. So the daily chart is in the right place and looking for that opportunity to get that move. Let's come back out to equity indexes. Quiet, quiet. Well, Russell's doing good. Okay. All right, so we got Russell. The target for Russell would be the prior sessions is unfilled inside day gap. Okay. We have an opposing zone. Russell is on the larger time frame. Remember we talked about this earlier. It's right in that support area. Okay. 78% of the time we should get a bounce out of this area. Okay. But that does not mean we won't get stopped out of the trade or we don't have risk on the trade. Okay. All right, the other equity indexes are pulling back a little bit based on the volatility of the economic reports. I'm going to get this trade set up on the Dow, 33,882. And let's come back out and look at the, oh, okay. So I dropped down to a tick chart to get some information here. Okay. 1-day volatility index, if it's below the moving average, is often more bearish conditions. Okay. Short-term trading. BKX above would be more bullish condition. Okay. But since the BKX is below, okay, we want the 1-day volatility index to be above, and we'd have a little more downside to go with this. Okay. We have a nice buy territory is forming. Okay. We also have a small support area right now that has been touched multiple times. Okay. And you could even say it's breaking. Okay. We're looking for, there is no demand zone down in this area. This is a lot of the overnight session. I'm kind of looking for it now. Okay. We do have a speed bump area right here where we can anticipate the bounce. S&P volume weighted average price 42.65, which is what we're just now bouncing off of. Okay. There's a lot of algorithms out there looking for that 42.55. That volume weighted average price area. Okay. 42.65. Yeah, roughly right there. Okay. Well, we got soybean meal coming back to save the day. I know the boring ones are making the money now. British pound pulling back. Heating oil at the zone. Crude oil still right at the session lows. And we also have a large time frame on the bonds. Yeah. Now we're going to have to see that the Treasury yield is going to start to continue down. Now, as you see in the Treasury yield, the ticker symbol on TradingView is US 10Y. Okay, if you don't have that. As Treasury yields are bouncing up, it's going to put pressure on the gold trade. It's going to put pressure on the metals. It's going to put pressure on the bonds. It's going to put pressure on the equity indexes to move lower. Okay. So our long trade that we had on the Russell, okay, is taking a little heat at this point. Okay. Since the Treasury yield is moving back up and the Russell did go deep in the zone, which is what I wasn't anticipating it to do, okay, because it should have been only a proximal line entry, you have to make a decision. Will you get out at break even if it bounces back up? Okay? And that might be the best opportunity to do that. Okay? Speed bump, tested a speed bump, price coming back up. Now, one thing that we have observed is when we have the leg base group of candles, and they're inside the dead space. Dead space is defined by price being trapped between support, a qualified support or resistance area. Okay, now dead space is off, price often just moves right through that. Okay. Hi Daphne, let's see, how do you describe and define a speed bump? Okay, well, a speed bump, in what I'm describing here, I'll try to use an example right here, is, you know, we qualify our support and resistance areas by using a box, and we look for it to touch the area minimum 3 times, okay? Now, once we have that area of resistance, in this example here, I have it defined right there, and I have that, now I have a resistance area, okay? Notice over on the left-hand side, there's this little area right here. That's what we're referring to as a speed bump, okay? And what happens is that speed bump has to be tested, and then we get the pullback, okay? When the speed bumps are present, we often get a small breakout and then a pullback into that demand, especially if there's a buy territory below it, okay? This is one of the trades I was looking at last night, but once the Treasuries and the dollar opened up, I got stopped out, okay? So as price broke out above that, we ran into a speed bump, things got choppy, pulled back below that area into that demand, took the long, and then the dollar opened up and got volatile. I got stopped out of that one, okay? That's why we always manage risk, okay? We have a support right now here, okay? We have a leg base group of candles. If I adjust it up or down a tick or two, okay, right in this range here. A supply or demand zone just above or below resistance or support can often be referred to as that speed bump area, okay? Whereas we get all excited about the breakout and going short, and it drops into that little speed bump and then reverses on us. If we're aware of the speed bumps, we can choose whether we want to accept the risk or not on that trade. Now, speed bumps are not often zones because we don't have the evidence on the left-hand side of the chart, making this area a buy territory, okay? All right, so NASDAQ, we have that whole resistance area, and now we have our 3 touches. Have our support. Now I'm using the colors to help train your eyes that a support area is where buy tickets just kept coming in, okay? Buyers, 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 okay? The area up above, okay, now becomes that sell territory, where sellers were coming in and pushing price lower. Okay, sell territory, and then we have support. So that battle between the buyers and sellers. It's not always an equal battle. Sometimes we have more sellers on their side and then less buyers. Once the buyers, the buy tickets have been depleted, price breaks through that level. Now, part of our 5-step process is that we must also map out the structure inside the cell territory, okay? And often when we make a lower high, our lake base zone for a cell is right closer to the breakout, or the bottom 2/3, okay? Now this becomes, after you get comfortable doing this and after you've been trained, you start getting more comfortable at recognizing it's pretty much the same picture or pattern when the banks and institutions are involved, okay? So now that I take this information and look down, I can see that we do have 3 touches right across here where the sellers stepped in, pushing price down. The area below became the buy territory. Okay. And we're looking for that lake base group of candles. Got one right here. And this becomes information we can use in participating in a trade, okay? If we make higher lows, generally the lake base is closer to the breakout point, okay? What do we got going on here? Ooh, Russell went way deep in the zone. Seems like the indexes are starting to fall apart a little bit. All right, gold still holding its own. Nat gas. Okay, crude's doing okay so far. I still have a hole to dig out of, okay? Not every day is a profitable trading, okay? We're understanding that these trading environment, okay, and I want to bring you back out, a lot of times during this, the Jewish holidays, okay, we get some of these big volatile swings. So often it happens, if you go back and document it, okay, verify it, is that Wednesday and Thursday tend to be that great volatility. Friday, things kind of quiet down, and then as everybody comes back from the holidays, Monday and Tuesday is going to be a really kind of congestion, okay, as they come in to unwind the hedge that they had on for the holiday, okay? We still have the crude oil report coming out based on what Chris has updated us in the Discord room about the study that she's been doing for well over a year now. That is valuable information, okay? And let's see, when we had CL, that one did get stopped out. Heating oil is coming back down to that zone, and I didn't have those filled out. These are our additional preps, okay? All right, so what? Still waiting on wheat to come back down. Looks like silver just bounced off the top of that zone again. Copper still looking for a demand zone down 3.5015. Okay. Looking for a breakout move on corn above 490. Hey, oh, thanks, Matt. Okay, Matt just posted in the Discord room one of the trades he's looking. Matt does a lot of the stocks, okay? Now notice how Matt put that together. I mean, this is a nice little 15-minute leg base. It's in the right location, okay? He's looking for profit potential because you got the dead space right here, okay? Now, Matt learned and put all these things together. I mean, just by hanging out and also being part of the Mastering the Charts course and understanding these things. But I encourage our students to keep posting your charts in here because sometimes I can find little things that can give you the additional pieces of information that you will start to see and have questions about. So thank you, Matt, for posting that in there. It's a great little setup, okay? There is still risk on the trade. Manage your risk how you, based on your trading plan, okay? So you'll see that as students and myself, everybody, we do help out in here. In the Discord room, I do want to point out we do have that voice channel. It's the active income group, okay? Now, we're all in here right now, but when I'm not in a class environment, like teaching Mastering the Charts or the live trading room or the recap and review session, which we have an hour after this session, okay, where we kind of go a little more in depth, is that, I'll come and hang out with the rest of the traders, okay? We're all here to try to make money by trading, okay? And sometimes our peers can provide a educational opportunity or a trading opportunity that they're taking, okay? And they're sharing. And sometimes we say, oh, hey, did you see the weekly chart on that one? Okay? And traders helping traders. That's what this whole community is about. Okay? We got stopped on the Russell. Yep. Yeah, this market is not being happy. Now, on the Russell, we got a long way to go. But what happened? The market looked so bullish this morning, didn't it? Okay. Looked like we're going to get a strong move back to the upside. S&P has now filled the gap. We're looking for that pullback. Okay. We still potentially can go back up. Okay. But that inside day or gapping up inside the range, we have to anticipate that gaps fill most often the same day. NASDAQ is the last one to come back down and fill that gap. Okay. Dow. Okay. Russell really going lower. Now, I don't have a trade short. I don't have a setup to take the trade short on the Russell. If I have a setup to take the Russell short, we would be all over it, okay? But right now, the patterns have set where we had sellers popping in. We were looking for it to break through those sellers, okay? You just can't click the button and jump in, go long or short, without having a trading plan. I am watching the large time frame over here on the Russell, the daily chart, and we're getting knee deep in that support area. Okay, support, not a zone. Trend is getting a little high, so it implies that there is more buying, more upticks and up volume than downticks and down volume coming into the market. And we're still waiting on the crude oil. Might have to step out of this one. Yep, my risk is managed. I know what my risk is on the trade. I'm just going to let it work. Price found some buyers down here, but we're not sure if it found enough buyers to take this all the way back up. Okay. Now, inventories are low, so we're approaching that, inventory reports show a drawdown, okay? So Chris had also explained that the volatility on this was approximately 63 cents, okay? Over 65 weeks, that was the average swing in price. So let's get an idea what 63 is. on, 63. There we go. Yeah, let's see if we can find another zone. I mean, the 60-minute chart had that area marked, but we also use heating oil as an odds enhancer, and heating oil is still dropping. A large time frame, we did have heating oil coming into
order filled,
that demand zone, okay? So at some point, we're expecting heating oil to make a change, okay? Canadian dollar has also hit the proximal line entry. And I want to take a quick look out here. Yeah, so far, just a bounce on the yields. Dollar. Ooh, well, the dollar shot back up. Looks like it's looking for supply, okay? So we did have a support area here where buyers kept coming in and supporting price, okay? Price broke out to the downside, leaving the upper area here as our sell territory. Breakout, and now we're looking for, I'm just going to change the time frame a little bit, look for the leg base. Okay. Okay, so dollar is approaching some supply. I'm going to drop this down a little smaller, see if we can find another leg base. 9, 8. Yeah, we might be able to tighten that up. I had to go down a really small time frame right there to find that leg base. Leg base meets the criteria. Okay, so we have some sellers left up here on the dollar. Headline news, bond market is sending a recession warning. Okay. That's causing a little bearishness to come in the market. We also want to come back out and look at those bonds. They're all in demand. But boy, they're making things look ugly and scary, aren't they? British pound also looking for that pullback back down to demand. We missed the breakout. The only way these FX markets are going to go up is if the yields continue to go down, okay? So as we're approaching demand zones on FX markets, okay, and bonds and stuff like that, we want to make sure that we're prepared for if the yield starts to go down, that's when these are going up. Now, if the yield continues to go up like the dollar just bounced up, that's going to have a negative impact on the equity indexes, metals, FX markets. Okay. All right. So silver, and we're seeing a pullback on the euro as well. You know, sometimes you want the day to go great in the markets. We just have to wait for trades to come to us. This one is way lower here. The Swiss franc. Let's go out to the tick chart. What do we have going on here? 4248. That's your target down there, okay? Yeah, I'm looking for another odds enhancer, okay? When we're drawing the resistance and support, okay? And you have a down move, okay? And you see that your resistance right up here, resistance and support defined with 3 touches or more, okay? When we start mapping out the structures inside the buy territories or sell territories, recognizing when we have 3 touches on the left, okay, often the low pivot can be on the right hand side, okay? So in the next section, I'll cover some more of this and draw out some of the structures to help you train the eyes, okay? The next session I will be doing, which will be an hour after this session, will be for the Mastering the Charts review and recap. Now this week is kind of our transition week, and we're putting a lot of things together. The team is working very hard. You will get emails and with instructions, but also use the Discord room as well to get some of the messages that we might be posting out there to register. And of course, once we have all the pay links up there. Now, we do have a few things to settle. We're trying to work that out with Caitlin and myself to settle out those other payments and move them forward. But that's a work in progress now. It's a mighty challenge, but we'll get everybody refunded. It may take a week or so, but we will need everybody to re-sign up using the new links. So look for that information in the Discord room or via email. Okay, that'll start really soon. Okay, we've got to start getting everything ready so we can have a lot more to share with you. So in the Mastering the Charts review and recap, that session, which starts in about an hour, is designed to follow up with the Mastering the Charts course, okay, training your eyes and such. Let's see, prior low 51. Okay, so we're getting ready for the crude oil report coming out. We got about 63.63 cent reaction price. Okay, there is a supply zone, a resistance area up there, and I do want to find out if we have a demand zone just a little bit lower.
Order filled.
There it is. How come I didn't have that one on there? Oh, we just got filled on the Dow. Well, a lot of economic reports coming out today. So right now, we're looking for that reaction. The reaction has been about 63 cents on average. Okay, we have a potential breakout area up here. This one also, notice the 3 touches on the left and low pivot point on the right. Okay. I really want to get a hold of this because that move up can be quite substantial when you have that particular structure. In the Mastering the Charts review and recap, okay, we'll post a link and it'll be YouTube live again. That'll start in an hour at 11:30 Eastern, where we'll explain some of those. right, so we got the reaction candle, and I'll look to participate in that trade here. We're right in that demand zone right now. I need to take one more shot at this.
Order filled.
Yep. Of course, it saw me coming, didn't it? Still looking for buyers. Not as a fantastic session as I had anticipated. We are getting our indexes pulling back. Our Dow trade triggered. Okay, nice little entry off the Dow as we wrap up this session, and we're still doing okay with soybean meal. We just need the yields to change direction. Heating oil getting a bounce off of that demand zone, so heating oil is still an option.
Order filled.
And crude oil is just not my friend today. Okay, so I'll wait a little bit longer on crude oil, looking for prices to move back up. Okay. All right, everybody, let's wrap up this session. Okay, and I will see you guys in about an hour over in the Mastering the Charts review and recap. And we'll continue with some of a little deeper dive into some of the parts of the Mastering the Charts course. Okay. Have a wonderful day, everybody. Thanks for coming in, Mario. Appreciate that. Miss you, buddy. Hope everything's going good with it. All right. Have a great day, everybody. Oh, the link was just now posted in the Discord room. Let me copy that link in the chat one more time if you want to participate. Let's go get, click on the Discord room. You can get a lot of announcements and information from there, okay? All right, so let's put our ending page. And thank you, everybody, for coming. I got to get these screens down, and I will. Everybody have a wonderful day. I'll see you in about an hour over in the next section. Okay, go to the Discord room, and in the Discord room, if you have a chance, write a testimony, add some picture perfect past trades, and have a great rest of the day. Bye now.